So we've looked at all countries to see which companies are expensive and which ones are relatively cheaper on a sort of PE ratio basis, which is one of the big things on everyone's lips is, where can you find value in today's market? Well, fortunately, Markit has a equity factors screening tool. And according to the normalized earnings yield, the US is the most expensive place at the moment, the UK halfway in the middle, and somewhere like Hong Kong is looking like the cheapest on a PE or a normalized earnings yield basis, so quite good value in Hong Kong. That ties in with kind of people starting to say that China is looking quite cheap. Now, of course, a lot of Chinese companies have H shares listed in Hong Kong, so it ties together. China's trading on a PE of around 9 times, which is pretty amazing considering it's about 15, 16 times for the UK, about 18, 19 times PE for the S&P 500. So, China's looking quite cheap, growing 7% a year. We're 7.5%. The numbers that just came out were ahead of the government's projected numbers. So growth in China is strong, and there's a lot of reforms going through which seem to be taken quite seriously. So China is on the agenda for people looking for value this year. The final thing to talk about, of course, is Deutsche Bank's kind of sort of rushed out results. You can't have missed that. Now, no one's really shorting Deutsche Bank because no one can probably understand. I mean, it's going to be quite volatile, and they've got litigation over LIBOR and lots of moving parts, but their fixed income trading was down 31%. Their equity trading was up 8%, but as we'll see from our league table stuff coming up later, they've dropped a couple of places in the league tables for their share of the equity trading pie. And there's kind of slow progress and quite costly in reducing their balance sheet. So Deutsche Bank was quite interesting, and that's going to be quite an interesting lead into other results from other European banks. Clearly, fixed income trading was a very hard place to be, and leading to that loss in the fourth quarter.